Welcome to the Three Edge Week in Review for the week of September 22nd. I'm Fritz Folts, the Chief Investment Strategist here at Three Edge, and joining me here once again today is Steve Cucchiaro, the CEO and Chief Investment Officer here at Three Edge Asset Management. And today, Steve and I will discuss a topic that may not be receiving as much attention as it might be, and that is the decline in the value of the U.S. dollar, which has fallen over 10% against a basket of the world's major currencies. And this represents the sharpest drop in the dollar since the 1970s. We do have a lot to cover today, so let's get started. And Steve, maybe you could begin by having you explain what might be behind the dramatic decline in the value of the dollar and what are the potential implications for investment strategies.
Well, Fritz, the U.S. is a debtor nation. We depend on foreign investment to help fund our debt. So foreign investors are buying our bonds. But foreign investors are also buying our stocks and our currencies. And by foreign investors, I mean both institutional investors, central banks, and also sovereign wealth funds. They're all examples of large buyers of U.S. stocks, bonds, and currencies. So this year, as you mentioned, the dollar's had a sharp fall. And this has big implications because even though they're investing in our stocks and our bonds, and our stocks and bonds have been going up in value, once they subtract the loss in the currency and translate everything back to their own currency, the returns are sharply reduced. So even though our stock market has been doing quite well and is in the low to mid double digits, after factoring in the currency drop and after the hedging costs that they have to put together, they barely make any gains. And it's even worse for the bond market. They buy our bonds, the bonds have some positive return, but after taking into account the exchange rate decline in the dollar and any hedging on the bonds, they're actually losing money in investing in our bonds. So this is a serious consideration to make. And as you said, the drop in the U.S. dollar has been really sharp, sharpest in 60 years, and yet very little attention is going to that. Let me ask you if, I know we discussed this, and you have some great thoughts on why is the dollar declining so rapidly ever since early this year?
Sure. So, there's a confluence of factors that have caused foreign investors to turn negative on the dollar in 2025. For one, the current administration in Washington, they've been actively advocating for a weaker dollar to help make U.S. exports more competitive in the global markets. And in addition, the Trump administration has been pressuring Jay Powell and the Fed to lower interest rates. And as has been the case throughout history, the potential for political interference in monetary policy, that can undermine the stability of our country's currency. Foreign investors also becoming more concerned with the continuing increase in the size of the U.S. government's debt. And so, just in general, if foreign investors have become more worried about the current situation in Washington, and these factors, among others, have helped to make them uncomfortable when it comes to holding dollars. So, that's where we are today. Now, I know that you have an interesting chart that you've developed, which gives more of an economic explanation about why the pressure on the U.S. dollar could continue.
Well, you just gave a lot of reasons why the dollar has fallen so far this year and why those reasons might not go away and might continue. But in addition to that, there's a strong economic reason why the dollar might continue to fall. So I'd like to give attention to this chart. And what it looks at is the impact of monetary policy and the impact on fiscal policy on the value of a country's currency. And what we know is, all else being equal, when monetary policy becomes tighter, that usually helps raise interest rates and makes that country's currency more valuable. And it attracts dollars into that currency. And when monetary policy gets looser, it has the opposite effect. Now, fiscal policy also has a big impact where when fiscal policy gets looser, meaning if you have big tax cuts or other spending that the government does in excess of what it takes in, that can help grow the economy beyond what it normally would have. And that extra growth can help attract money into that country's currency. On the other hand, even if you have a position of loose fiscal policy, if it becomes tighter, if the change is tighter, then that can all act in the reverse way and start to weaken the currencies in that country. And what we know now is that with monetary policy, there's all this pressure, as you mentioned, on the Fed to lower rates. And they began to cut a year ago, and they cut again just a few days ago. And they're expected to cut more even before the end of the year. So this is taking pressure off the US dollar going up, and it's adding to weakness of the US dollar, all else being equal. On the fiscal policy side, there's a lot mentioned about tax cuts, but the big tax cuts were done in 2017, and there's been an extension of the existing tax cuts and some minor new tax cutting that's been done, but not a huge change. On the other hand, the tariff tax, and tariffs are nothing more than a tax on imports against our own companies. The tariff tax is greatly grown, and it's bigger than it's been since the 1930s now, and it overwhelms any benefit from any minor tax cutting that happened as a result of the bill. And so this, in effect, is tightening fiscal policy. So the combination of tightening fiscal policy and weakening monetary policy is net negative for the US dollar.
Excellent. All right. So, as always, my final question is as follows. Based on what we've discussed here today about the decline in the US dollar and the potential for it to continue to decline going forward, what portfolio strategies should investors think about? What should they consider doing at this point?
Well, first of all, while the weaker dollar shrinks stock market gains for foreign investors in their own currencies, they add to gains, the weaker dollar adds to gains to U.S. investors holding international stocks. Year to date, this has worked very well, and to U.S. investors have made more money on their international stocks than they've made on the U.S. stocks. And part of this is the currency situation where the dollar's declining. So one obvious investment strategy, especially should the dollar continue to decline, is to diversify beyond just U.S. stocks and own international stocks alongside U.S. stocks. Second strategy is, in the face of a declining dollar, hard assets like gold and many commodities are typically priced in U.S. dollars. And so they become a natural hedge against a falling U.S. dollar. All else being equal, when the U.S. dollar falls, their prices can go up and offset that falling U.S. dollar because they're priced in U.S. dollars. And this is very much unlike bonds. Bonds will not have that same natural hedge against a falling U.S. dollar because they're based in dollars. So another obvious strategy is don't rely solely on bonds to hedge your currencies. To hedge your equities and to be a complement for your currencies, but rely more on hard assets like gold and other hard assets. So to summarize, diversification is especially important in an environment of a falling dollar. Include international equities, not just U.S. equities, and include hard assets, not just bonds.
Perfect. Thank you. Thank you, Steve. Be interesting to see what path the dollar will take for the remainder of 2025 and beyond, and we will be closely following any developments in the currency markets from here. So that will do it for Steve and me for this week. We will be back next week with another edition of the 3 Edge Week in Review. All our videos are always available on our 3 Edge YouTube channel. If you know someone who you think might benefit from these videos, please feel free to share them. And if you enjoy our videos, please consider subscribing to our 3 Edge YouTube channel. We would be most appreciative. So, until next time, on behalf of Steve and everyone here at 3 Edge, thanks for listening.